Hey, this is Jack from Alpha Charts with a sale and market video. Today is April 8th, 2023. Before we get started, this video is for informational purposes only. These are not recommendations to buy, sell, or hold any stock or security. Now, you may hold positions in some of the equities mentioned. Know your time frame and risk tolerance. All right. If you like these videos, please like and subscribe to my YouTube channel. By the way, don't wait. Do it now. And you can find me also on Twitter at AlphaCharts365. Check me out there. Okay, SPX. VWAP from the top, and can't see the market like respected it immediately, but then it did here. It kind of did here, broke out, came back, did again, and now we're just sitting right on top of it. That's going to be interesting to see what happens when we get to next week. Remember, this was a holiday shortened week with this little pullback after a very strong week, right? So on Monday, Tuesday, Wednesday, do we see a continued move lower, or are we going to say this is more like a flag and we continue higher? That is going to be on the SPX really important. Again, very low volume on Thursday. Markets closed on Friday. So, I'm not worried about the low volume piece because of people on vacation, stuff like that. But when you just look at the pure moving averages, it's like, let me just see if I could, there it is, right? You can see how they're starting to set up in a bullish manner, right? You have the 200-day starting to curve up. You have the 50-day in an uptrend. You have the 9 and the 23-day again crossing over. So there is a bullish look to the moving averages. The question is this some sort of toppy pattern or even just more sideways chop coming, right? That's what we're really, the question is. I think we're going to get our answer pretty quickly next week, right? If we take out even this high right here, 41.35 on a closing basis, I think that we can say, okay, this is more of a bull market scenario, and things are okay. If we continue lower or we get big volume, to the downside, I think that the chop to lower makes more sense. Now, again, we still have RSP. That doesn't quite look as good, right? I mean, it's sitting on top of the moving averages with a declining 50. Now, this is the equal weighted SPX, and it just shows you how bad the breadth is on the indexes. And I like to do the RSP versus SPX, right? Change it to a line chart and just get rid of the moving average and the volume, just so we can see it a little bit more cleaner. And you can see how the cap weighted is just outperforming, and that's obviously Apple, Amazon, Nvidia, whatever. Actually, Nvidia I don't think is an S&P, but you get the idea. The mega caps are pushing the markets around, and so that's something to keep in mind, that it's not this broad-based rally. This is very concentrated into the largest names possible for whatever the reason is, right? Whether is a place where people can exit the market easily, whether they feel safe there, whatever it is, it's definitely a concentrated, in my opinion, rally still. Looking at the Qs, which have done much better really since the beginning of the year than the other indexes, which we could not say coming into the year, right? It was definitely the laggard coming into the year. Now it's doing much better. It did break above, again, there's your VWAP from the top. It did break above it right here, fell back, and then reclaimed it. Again, lower volume because it was, holiday week, but still, it was a reclaim. And I think that's a positive, and I think that's where the fight is. We already have bullishly aligned moving averages, and things are looking okay. I mean, I really want to see it take out this high right here, but it took out this high, and I think that's a positive, and it kind of held the retest, right? At least so far. If you kind of do that, broke out, that's really a retest in a lot of ways. And so as long as it holds above this area, I think things are looking good for multiple reasons. A break back below 311 or so, and And I think things get a little bit more murky in that respect. Okay. But again, right now, bullish look to the charts. Here's the equal weight. Equal weight looks a little bit less bullish because we have this area overhead that has been resistance. And, again, we'd like to see this kind of take it out 70, call it $74. The equal weight above 74, and things are looking, I think, pretty good overall. They don't look terrible right now, but there's a very significant area overhead that we got to watch for on the equal weighted. Again, things are doing okay. They're healing. I can definitely see higher lows coming through here. Even if this makes some sort of stand right here at $70, it would just be another higher low. And we stopped making really lower highs. I mean, I guess you could call this a lower high, just barely, but it's there. And so this could be a lower high to this. If this holds right here and this turns over, you can make that argument for sure. But I would tell you $74. That's the real level right there. Yeah, IWM. IWM's been real weak. Remember, that's equal weighted by nature, the way it's made. And you can see it's below all of its moving averages, and it has a very bearish look. So at one point, you have cap-weighted SPX, cap-weighted Qs, which look great. Their equal-weighted counterparts look a little bit less great. And now you have IWM, a risk-on ETF index, and it looks not very good at all. Let's see where the 200-day is. It's right there in June 21st. I'm just moving this around. Yeah, so it doesn't look good at all. Now price gets above, 181. I'll start to change my stance, right? But small caps, no bueno, not good. So we'll see how this ends up playing out. Or if this is like, some kind of bear flag, again, that is the concern. That this is, a bear flag that's starting to break down, right? And maybe this is leading things lower. We'll find out. And this little green area, that's the fight, right? When we really look at it, this has been, resistance in 2018, resistance in 2020, support, keeps hammering down on the support. This breaks below, 163-ish. 165, 163, something like that. It's hard to become very bullish when small caps are breaking down, right? That's a risk on index. So that's definitely something that to keep an eye on, right? How are these small caps acting? And is this going to start leading into the wrong direction for stocks? And looking at IWO, it looks similar enough for the most part. You have a little more space. This 200 level is really big for IWO. But again, it just looks like sideways chop for now. But a break below 200, and things can get pretty nasty pretty quickly. So just be aware of that. All right. Let's look at mid caps. Again, my favorite index. And it looks more like the small caps and IWO than anything else, right? We're back below a flat 200-day, and things are starting to turn lower on the moving average side. Loved it back here, but I think when things change, you have to change with them, right? So again, there's mixed signals on the index level, right? Mixed signals. Let's see what the ETFs tell us. Here's XLF. Again, is this a bear flag on XLF? Like if it is, and we break this $30 level, it's not good, right? I think the whole market is going to be in really, really bad shape if that's what this turns out to be. So let's draw that in here too, just so it's easy to see for everybody. Real simple, bear flag, right? So if this ends up going like that, that's gonna be really bad, really, really bad. So we'll see. We'll see what happens. We don't know yet if this is going to happen. But my guess would be, with earnings season ramping back up again, I think it starts next week, but I have to check on that. Um, you know, we'll see we'll see. But XLF still above 30. That's a positive. But watch for this move. If we see a sharp move lower in XLF, and it's not that far away from 30, it's about what, 8%. No, not even 6.5%. So just be careful with XLF. What else do we have here? But it's positive because it's still above it. Semiconductors, which was the strength, is now getting a little loose and wobbly in there. That's XSD, the equal weight semiconductors, not looking great. It is holding the area it has to hold, but that's not a great look to it. And let's even look at SMH because this is the cap weighted. Again, NVIDIA dominates this one. And again, there's some good accumulation as it was going higher. It kind of had this little breakout and then came back in. Again, not a great look on the semiconductors. Again, has it totally fallen apart? They haven't, but it is concerning, if nothing else. Transports, XTN, below the moving averages, not great. Home builders, XHB, this is home builders, and also associated stocks to home builders. Again, above a 200-day rising, but moving lower, right? Not a great look, especially if you consider this a false breakout. I think ITB is the home construction. I think it's a pure play on home builders. Again, it looks very similar. It looks very, very similar. All right, so let's talk about the ETFs. Again, there's concern, right? There's concern still out there. It's not clear cut. It's not very clean. Just like like XLF, it's still above $30, but it has a pattern that says be careful, right? Now, if we break to the upside here, that would definitely be the bullish case scenario, right? If this breaks out above $33, $34, I'll change, that's a completely different situation. All right, so let's look at the internals and see what those say. What am I doing? I'm doing this, and let's get rid of that. Go to line chart and the VIX, 18.39, right? Which is a low VIX, which is most people say is very bullish, and there's something to be said for that. But I look at this area where it's at now, and any place lower than that as a chance for potential volatility to come back into the market. And we've seen that before. Now, I'm not saying it can't go lower, right? That would not shock me at all. But what do we see after it gets into this, under 18, under 19, we can see spikes of volatility come back in. So as a contrarian, that is what I'm looking at right here. Again, it can go lower, and it may be lower for longer, for all I know. But there is a scenario where things can get, volatility comes back into the market. Volatility comes back in. Volatility comes back in. Volatility comes back in. Credit spreads, they were coming in. Yeah. There we go. One more try. There we go. Credit spreads were coming back in, then they kind of spiked, and now they're still in the same general area, so they try to come back in, but they couldn't, but they haven't broken out yet. So again, still a widening and loosening of credit spreads. Again, a little bit more concerning look to this. I was happy when they were coming in. That was definitely a bullish case. Maybe setting up a bull trap, we'll find out. And then they came back up. So we'll see if that's, if this continues to come back in, that'd be very bullish, but not so much. Put call ratio, looking at sentiment. Put call ratio, again, right in the middle, not much of an indicator right there. Looking at the dollar. Here's the dollar index, again, held where it had to, and we'll see if it goes higher. I mean, when dollar's been falling, the stocks have done very well, right? When the dollar is rising, it's a harder penny market. So we'll see what happens. Again, just going here. It's hard to say that this is rising dollar again. If it gets above 103, 104, and then eventually 105, 106, that's a rising dollar. Right now, not much to say there. And then what else are we gonna look at here? Oh, MMFI breadth. Nice little breadth study here. Percent stocks above the 50-day moving average is right at 29%. And so again, it improved some from here, but couldn't really get a ton of traction. We'll see if it could take out, $38 or 38% and get above 50%. That's expanding breadth. Again, we're not getting a ton of expansion in breadth. Just transient mild. So we'll see how this actually all plays out. Does this roll back over, or does it take out this 37% and start to move higher? Expanding breadth is, again, would get me a lot more bullish than where I'm at now. Right now, it's state of the market is cautionary. You have a potential toppy pattern there. You have XLF with a potential issue there. You have IWM with a potential issue there. You have the internals saying volatility might be increasing. You have a lot of stuff going on that I think we should be cautious with. This is not a rip-roaring bull market in any way, shape, or form, in my opinion. I would change my stance pretty quickly intra-week if we started to take out this high right there, and even closing above 41.40. That would actually change my stance quite a bit, right? Because I would think the market's doing much better in that scenario. Okay. Hope you have a good week. Happy holidays, and we'll talk to you soon. Bye.